Hey everyone, how's it going? It's Russell here, and oh my goodness, Tiff Macklem of the Bank of Canada, he's the governor of the Bank of Canada, just finished up his press conference commenting on the Financial Stability Report. And inside of this report, there are some warnings for Canadians, particularly about real estate, about cryptocurrency, and in inflation. So in today's video, I'm gonna give you a full summary so you don't have to watch the hour-and-a-half long press conference to get at all the information that Tiff Macklem just laid out for Canadians here. Lots of interesting stuff, but before we get into the information, if you haven't already done so, check out the link in the description for 45% off the Money Mastery program right here in Canada with coupon code INVEST. It's only going to last 10 more days, so if you're interested in it, check out that program down below. All right, now let's get into exactly what was said inside of this update. And we're going to start with real estate here. Now, Tiff Macklem sort of shifted positions here, saying, hey, housing? This is our biggest issue right now. We are concerned about housing. This is a total shift from what Tiff Macklem said before, right? Previously, he was saying, okay, we see some signs that there could be some overheating in the market, but we think it's mostly just supply and demand and a little bit of us lowering the interest rates, but don't worry about that. We think that the market is healthy. Now, today marks a sharp turn in terms of the Bank of Canada's outlook and perspective on the real estate market. They looked right into the camera and said, Canadians, especially if you have a high loan to value, right? The amount of equity you have in your home is smaller when compared to the amount of loan you have. That's loan to value. They're worried about Canadians who have only around 5% put down on their home and are potentially getting mortgages at these super low rates, while they're worried about the systemic risks that could come from that when it comes time to renew their mortgage. And they think, hey, maybe people aren't going to be able to actually afford that mortgage re-up, and maybe that's going to cause some major problems for the Canadian housing market. And they also made some interesting comments about the environment in relation to housing. And it's also tied to this loan to value worry that the Bank of Canada has. They say, hey, if things happen to the climate and we see more extreme weather, more people who own these homes who could be potentially underwater on their mortgage in the future, well, maybe they wouldn't be able to afford both the payments on their mortgage as well as paying to sort of update and maintain their houses as well, providing another external risk for homeowners. Now, this is also alongside what the Bank of Canada said about people who are investing in things that aren't specifically eco-friendly and are sensitive to climate change concerns in the future. The Bank of Canada believes that there's a huge overvaluing of stocks that are particularly exposed to risk on the climate change side of things, potentially oil stocks, along with a whole bunch of other different sectors that could be affected by this. Now, I found this a little bit interesting that they were commenting on what people should be investing in. That's typically not the role of a central bank, but they seem to think that some of these assets are overvalued. But then when we got to the section of the press conference where reporters were actually asking questions, many reporters were so focused on real estate. They said, hey, like, if you're so worried about real estate right now, Bank of Canada, what are you doing to fix it? And they essentially said, well, we're not doing anything. They pointed to the federal government, the Liberal government's new plans inside of their 2021 budget that was released back on April 19th. Some of those measures are to add 35,000 units of affordable housing. Not going to do a lot for the housing prices when we consider there's 14 million units in Canada, or more than that now. So not a lot's being done there, as well as this tax that they're implementing on vacant residential real estate. Many people think that investors who are just holding the units and no one's living in it, well, they're going to be taxed 1% per year. But also, that's not something I think is going to do a whole lot, because it's a lot less than 1% of the property's value to just hire a property manager, put a tenant in there, maybe still be negative cash flow. But I think they're still just going to keep on holding this. Now, this could lower the rental market prices, but I don't think it's going to do much when it comes to purchase prices, right? So they were pointing, saying, hey, the federal government's got it under control. They're doing something. And they also pointed to the OFSI changes, the Office of the Superintendent for Financial Institutions. Now, they recently said that on the mortgage stress test front, they're going to be raising the amount of interest that you have to be able to qualify for on a mortgage. So essentially, people who could previously afford around $1 million home qualify for that mortgage, well, they're only going to be able to qualify for around $950,000 worth of a mortgage. The Bank of Canada and Tiff Macklem, they certainly hope that this is going to decrease the demand for housing, because the federal government really isn't doing a lot. Bank of Canada is not doing anything right now, so they're sort of pointing, saying, hey, OFSI, we really hope that your measures that you're putting in here will actually do something. And then a particularly astute reporter came up and said, hey, Bank of Canada, aren't you guys supposed to be the last resort for housing? If the federal government's not doing anything, if nobody else is doing anything, shouldn't you be the ones to do something, change your monetary policy to affect real estate prices? And to that, they sort of, Tiff Macklem, the governor, said, he went along with his talking points that he's been bringing up all of the time, saying, hey, well, we need to think about the total market, not just real estate. He believes that if they were to raise interest rates, which would slow down demand for real estate prices, well, that would have a negative consequence on the economy at large and also the employment numbers. You see, Tiff Macklem believes that if they raise interest rates, businesses won't be as likely to take on loans. There won't be as much growth or spending in the economy, and as a result, less businesses would hire, and the 500,000 or so Canadians who are unemployed right now fully, well, they would have a harder time getting jobs, and potentially more people could join those unemployed ranks if they raise interest rates. So based on what the Bank of Canada is saying, it seems like they feel like they're stuck between a rock and a hard place. They've got this awful situation with real estate, with more and more young Canadians feeling like they're priced out of the market, but at the same time they have this unemployment problem, and it seems like the solution to one is the detractor of the other, right? So it seems like the Bank of Canada is a little bit concerned, and they've got their hands tied, at least in Tiff Macklem's eyes. And they followed that up saying, hey, this financial system report that was the point of this press conference, well, we wanted to put that out there. We're not really doing anything to solve the problems we're talking about, but we want to put this research and this data out there so that the federal government and the provincial government and potentially even local governments could implement and assess these risks and then decide if they want to make any changes. It seems like a little bit of a cop-out saying, hey, you guys deal with this, but that's what they're saying here is that, hey, we want to provide this research so that other people can do things to solve the problems we're pointing out here. But then the Bank of Canada talked about something they don't typically talk about all that much, and they featured it in their financial systems report that they just released. Let me show you, it's all about cryptocurrency, and let me tell you that the Bank of Canada is at least a little bit concerned about some things that are happening in the cryptocurrency market right here in Canada. Let's switch over here. This is the actual financial system report, and I have some highlighted points here that I think are going to be most interesting to you. It's a little bit small for you to see, but I'll read it, don't worry. The first thing they say is that the price volatility stemming from speculative demand remains an important obstacle to the wide acceptance of crypto assets as a means of payment. Despite the broadening institutional interest in cryptos, they continue to be considered high risk because their intrinsic value is hard to establish. So they're saying typical cryptocurrency we're not too worried about because it's quite volatile, and that makes it difficult to use as a medium of transaction, right? A medium of exchange. But then they go on here and bring up stable coins. Now, if you don't know what stable coins are, essentially it's a crypto that's backed by some other asset trying to keep the price sort of stable, right? That hence stable coin. We have USDC, which is a stable coin that's sort of pegged against the US dollar. People think that this can sort of facilitate transactions in the crypto markets because we have something actually backing it rather than a kind of rough evaluation that other crypto assets have. And they talk about stable coins here. They say, but stable coins still share some of the same risks as other crypto assets, notably unless stable coins are backed by Canadian dollars. Their widespread adoption could inhibit the bank's ability to implement monetary policy and act as a lender of last resort. Now, let me tell you why I think that's so interesting. You see, the Bank of Canada, this is what they're scared about. Right now, the Bank of Canada, they control the Canadian dollar. They can print as much as they want to support the economy in the ways that they see fit. Now, if we start adopting stable coins that aren't necessarily tied to the Canadian dollar, and we start heavily using them here in Canada, well, all of a sudden, the Bank of Canada's power kind of evaporates just like that. They're not able to issue any more cryptocurrency. They're not able to sort of control the markets and the interest rates that we're currently getting based on their policies. So I think the Bank of Canada is a little bit concerned about this, that some of their power could be taken away here. And they also say this could change if they're saying despite the growing popularity, these markets are not of systemic importance of Canada. So they're not too concerned about the crypto markets in general compared to the size of the other markets, but they say this could change if a large technology firm, a so-called big tech, with a sizable user base decided to issue a cryptocurrency that became widely accepted as a means of payment. So essentially what they're saying here is they're concerned that maybe a big tech company, Facebook, Amazon, Netflix, Google, those FANG companies, right, that they could issue a cryptocurrency, and because they already have such a large user base, well, then people might start to accept this and sort of buy into this. But I think this shows just how far behind the Bank of Canada is, because one of the largest benefits of cryptocurrency is that it's decentralized. And I think a lot of people who are in support of crypto wouldn't be in support of a cryptocurrency issued by one of these big tech companies that is monetizing their data and doesn't have the best privacy practices, right? So I think it's interesting that they have this take on big tech. I don't think that's as big of a risk as they think, because the crypto community is smart, and I don't think they'd be too hip to a Facebook coin taking over. Now, they also say here that at this time, key regulatory challenges are associated with crypto assets include investor protection issues related to crypto asset trading platforms and the use of crypto assets in illicit transactions. So this is emphasizing something that Janet Yellen in the States has sort of brought into the narrative, saying, hey, crypto, it's just used by gang members and people doing illegal, illicit activities. And it seems like the Bank of Canada is sort of saying a similar narrative here. It's a little bit of a silly argument, because there's certainly that going on with fiat currency. So why are you so worried about it for crypto? So they're bringing up that narrative as well, saying that there's also risks because people's crypto assets in their hot wallets, like an online wallet, well, it's not protected and insured in the same way that regulated big banks are here in Canada. So that's another concern that they're bringing up here in terms of cryptocurrency. And finally, Tiff Macklem of the Bank of Canada was asked about inflation, something on a lot of people's minds right now. We see lumber prices going up. The cost of living for many people, in their eyes, they see it going up. We've seen assets inflating. And just yesterday, the new CPI, or Consumer Price Index information, was released, and we have 3.4% inflation. And this is above the Bank of Canada's 2% target for inflation. So everyone's saying, hey, Bank of Canada, are you worried about this? The Bank of Canada responded to that, saying, hey, we expected higher inflation right now in this most recent period because of something called base year effects. Essentially what Tiff Macklem said is that because of what happened last year around this time, COVID starting, the pandemic, historically low inflation, when that's compared to where we are now, well, yeah, it's going to look like we have huge inflation numbers right now, and we're expecting this. So he's not worried about that 3.4% in inflation. Now, the reporter kind of questioned this, saying, well, yeah, okay, there's base year effects, and we can sort of measure this against year over year, but what about when you measure it month to month? The reporter's saying we have seen increases on a month-to-month basis, sort of eliminating Tiff Macklem's argument that we're just seeing this inflation because of year-over-year effects, right? And to that, Tiff Macklem didn't really respond. He just said, if over the long term we see that inflation is above where we're projecting it to be, well, then we're going to step in and we're going to do something. But he really didn't provide any more information than that. And it doesn't even get to talking about how many Canadians are losing faith in the CPI as a measure of inflation, when it doesn't really heavily include things like people's mortgage payments. It's measured a little bit wrong, because with mortgage payments, well, we've seen interest rates going down, so people's mortgage payments have gone down. So that increase in cost of living, that's going to happen when interest rates go up. Well, it's not really reflected in the CPI, among many other issues, but that's what they talked about on inflation in this most recent press release. So a lot was said in this press conference, and I hope this summary has helped you get a better idea of some of these most important topics to you. It's definitely interesting to watch how things are progressing here. It's constantly changing, so if you want to stay up to date, make sure to subscribe to the channel. And while you're down there, check out that 45% off coupon code INVEST. You can use it at checkout for the Canada Money Mastery Program. That coupon code is going to be expiring in around 10 days, so check it out, see if it's something that sounds good for you. We teach everything about money you should have been taught back in high school. And with all of that said, thank you so much for watching, everybody. I really hope this video has helped you out at least a little bit, and I'll see you next time. This channel is supported by viewers like you. Thanks, channel members.